Think about this. The world is watching as tensions in the Middle East escalate faster than anyone expected, and the markets are reacting in ways most people don't even notice. Welcome back to The Quiet Markets, where we break down complex events into what really matters. Right now, Iran is at the center of global attention. And it's not just politics. It's money, it's commodities, it's oil, and precious metals. So pay close attention. Before we get started, if you want to understand how these events affect your investments, hit that like button, subscribe, and turn on notifications so you don't miss these critical updates. This is important. The escalation started with sudden reports of military actions, and the world reacted immediately. Fear and uncertainty hit markets. Investors scrambled, and the ripple effects hit gold, silver, and oil almost instantly. Think about that. Silver, for example, has jumped dramatically, reaching levels not seen in years. Some reports are now talking about $120 an ounce, a number that feels unreal. But here's why. This isn't just supply and demand. It's fear, speculation, and dark market activity. This is important. Gold, meanwhile, is trading at levels that seem almost impossible. $6,000 per ounce. Yes, you heard that right. And before you dismiss it as hype, large volumes of gold are moving through shadow markets, not publicly reported exchanges. Pay close attention. Oil prices have also surged, and this is more than a simple spike. We're talking historic jumps in crude futures, from normal daily fluctuations to sudden spikes that can affect everything, from gasoline prices to global transportation costs. Think about it. Now, why are these metals reacting so sharply, while stocks and bonds show more muted moves? The answer is simple. In times of geopolitical uncertainty, investors flock to hard assets with intrinsic value. And historically, gold and silver have been that safe haven. This is important. But here's the twist. It's not just small investors. Major funds, hedge funds, and even governments are moving assets into these metals, and not through conventional exchanges. They're using private, offshore, dark market channels, adding more volatility. Pay attention. In the last 48 hours, reports suggest physical silver is nearly impossible to find in large quantities. Premiums on delivery are skyrocketing, warehouses are running low, and smugglers are reportedly moving metals across borders at record prices. Think about that. Gold is facing the same effect. With bullion traders reporting unprecedented demand, some say official gold markets are lagging because the real trades are happening in the shadows. This is important. Oil is the third key piece. Iran is a major global oil player. Any disruption sends shockwaves through energy markets. Futures contracts are moving wildly, and traders who don't act fast could face massive losses. Pay attention. But here's what most people miss. These spikes aren't purely speculative. They reflect real supply fears, infrastructure concerns, and the possibility of sanctions or retaliatory strikes. Every headline, every news report fuels this feedback loop. Think about it. Let's slow down for a moment and consider what this means for you. If you hold metals, if you invest in commodities, these aren't just numbers on a screen. They could affect your portfolio, your buying power, even daily expenses. This is important. The Quiet Markets has been tracking this for weeks. And here's a key insight. This situation is different from past conflicts. The speed, the scale, and the global interconnectedness make it nearly impossible to predict exact outcomes. Volatility is the new normal. Pay attention. Even more. Geopolitical analysts warn this is only the beginning. Iran's actions could trigger broader regional conflicts involving other major players, which could push oil and metals even higher. Think about it. At the same time, some investors see opportunity. Those who can navigate dark market channel or hold physical metals are in positions to profit. But this is extremely high risk. This is important. Silver at $120, gold at $6,000, oil spiking daily. These aren't normal numbers. They are signals. Signals of fear, uncertainty, and the limits of traditional markets in times of crisis. Pay attention. And let's talk about timing. Markets react first. Media reacts second. Public awareness comes last. If you wait until everyone is talking about it, you may have missed the window. Think about that. It's also important to consider currency impacts. As the dollar reacts to geopolitical risk, metals often move inversely. Gold rises, the dollar dips, but these relationships aren't guaranteed. They're influenced by sentiment, policy, and large institutional moves. This is important. For those following Iran, the message is clear. Tension there affects more than the region. It affects global finance, supply chains, energy security, and the prices we pay every day. Pay attention. In the last few days, the Quiet Markets has reported shipping disruptions, delayed oil shipments, and banking restrictions, all of which amplify scarcity and push prices higher. Think about it. Now, imagine this continuing for weeks or months. Silver could become scarce, gold could rise further, oil could hit record highs, affecting global trade, inflation, even everyday costs. This is important. But let's bring it back to individual investors. For viewers like you, what should you do? First, stay informed, track reliable sources, but don't panic. Second, consider how much exposure you want to metals or commodities. Don't overextend, pay attention. Some will see this as an opportunity, others as a warning. And that's why the Quiet Markets exists, to help you separate noise from reality. Think about it. Remember, markets are emotional. They move faster than governments, faster than media. And if you understand the signals, you can navigate better. This is important. In summary, Iran's escalating conflict is driving dramatic moves in silver, gold, and oil, with dark market activity amplifying these trends. Physical scarcity is real, and volatility is high. Pay attention. Silver at $120, gold at $6,000, oil spiking. These are numbers that demand attention, not just for investors, but for anyone watching the global economy. Think about it. Before we finish, comment below. Tell us what you think will happen next. Do you see silver and gold continuing to rise, or will markets stabilize? Share your thoughts. And if this video was useful, share it. Subscribe to the Quiet Markets so you never miss critical updates. This is important. This story isn't over. Market reactions, geopolitical tensions, everything is moving. So stay alert, stay informed, and always question the headlines. Think about it. Thank you for watching the Quiet Markets. Keep your eyes open. And remember, in times like these, knowledge is your best investment. Pay attention.